All right, folks, welcome back. This is our weekend review for the ICT Mentorship, July 17th, 2020. Trying to get a jump on this weekend. I have 3 videos to do. So I have this one. I have the charter membership video for the trading plan for price action model number 6. And then I have a YouTube video, part 3 of our current series there. All right, so we're looking at the dollar daily. And we have this low in here that still hasn't been traded to. I do suspect that we're probably going to trade down there next week. We were holding more or less in a consolidation the last 3 days, and today showed a willingness to want to drop again after the small little fair value gap I mentioned yesterday and a breaker that was in here in that fractal. So we're looking for a run below this low here. Then the next downside objective is the rejection block, which is the closing price on this candle, and the low here. It's probably, if it's going to go lower, it's probably going to be larger ranges now because it's going to accelerate to get below here and then trade into this fractal. Okay, so let's drop down into an hourly chart. All right, so here's the hourly chart for the dollar index, and I'm going to put the annotations on in a minute, but I just want to kind of go over a few things before I put them on because it's going to get a little busy. We have these relative equal lows, and then we have this high and this high. So that makes this what? Bearish breaker. We trade into it here in the tails of these candles. We had it here again. And then yesterday we were sitting right in here, and as I did the daily review, I said that I'd like to see it just trade lower and go lower. And we got that. We had a little bit of a Judas swing in here in the Asian session and then drop down. These highs in here have me concerned about maybe wanting to see it go up into that area and then drop down. That would be okay. It'd be better if it didn't do that because we have a high, lower high, and a lower high. So that makes this a potential intermediate term high. So they can retrace into the price swing and take us up into the buy side liquidity resting above these relative equal highs. Then, again, I'd rather not do that, but if it does, then I'd look for it to aggressively sell off. That would be the ideal scenario if it trades there. But the even better scenario would be is to not even trade up there, leave this open as a gap, okay, and then trade down aggressively into next week, taking this low out. I don't want to see it just dip its toe in the water a little bit and then scream up again. I want to see it really definitively, slice through this low and start doing it in large ranges, just basically like this, but in a down move. Okay. Annotations. Here we have the bearish order block. I have the mean threshold annotated and the low on the tail of that candle, and we have the breaker here using the bodies. Extend it out in time. So we slammed into that yesterday. That was more or less the context of what I was outlining and why I was wanting to see it just roll right over. We had to tag it one more time. The bodies of the candles are respecting the breaker over here. Remember, we cut through candles to get to the narrative. Then we have that small little fair value gap. That's what these two lines are here. So it's based on this high and this low on the daily chart. So it wanted to get back up in there and rebalance that, and we saw that happen. Look at the reaction we got right there. Didn't quite close in the fair value gap from this low and the opening of this candle. It traded up almost for a complete closure or immediate rebalance in this case. And then we had a nice displacement, consolidation, and it just kept drifting lower, trading to a rejection block. So it went through the rejection block but did not go through the low. Classic scenario given the current environment we're in, but again, I'm still favoring the downside on dollars drop into a 15-minute time frame. All right, you can see the reaction here below the rejection block here, and really there isn't any kind of imbalance that needs to be sorted out until we get up to here. We have this SIBI, sell side imbalance, buy side inefficiency, relative equal highs. So that's what I'm saying. Like it would be better if it doesn't trade up there and just leaves it in place, because this would indicate potentially a breakaway gap, and then we can start looking for another gap after this low is taken out that could potentially become, or I would label it as a measuring gap. And that way, whatever we have in terms of the price movement from the gap here to the measuring gap, that's going to be a pretty good indication of how much lower dollar could go. Preface that by saying could is not an absolute. Okay, so I'm trying to stick with the rules, but this market environment is very difficult. Okay, it's not easy for me to do this. It usually is really easy for me to do it, but in this environment I am being challenged. So it may not feel like it, or it may not seem like it, because some of the things I'm talking about do pass onto your charts and unfold, but it's not easy for me to be able to say, okay, this is what it's going to do. And you can probably hear it in the last couple months in my delivery. I'm not absolutely confident that these things are going to unfold. So I have to measure everything with a healthy dose of risk warning to you, because some of you will take everything I say and expect it to be to script to every detail. And I don't have that expectation right now. And I'm the author of this stuff. So if I'm really reluctant to do that or have that strong opinion about it, it's important that you should not subscribe 100% to everything I'm saying is going to absolutely pan out. So be mindful of that. Don't plow into the marketplace with these ideas that I'm sharing and opinions and turn them into live trades. I can't say that enough, because you can potentially hurt yourself. And I would hate to see an email saying, well, I didn't listen, ICT. You said not to do this, but yet I did it, and hurt yourself. Okay, so here's the euro dollar. This is our daily chart. And as you can see, we had a really nice reaction in here. It's almost like time travel. Fair value gap. This candle's high. This candle's low. It trades back down in, fills it in, and then expansion on the upside. I do believe that we're going to take this high out. I like the idea that we're sitting the way we are, and I'm really confident that we're going to see large ranges on the upside because of everything that we see here. It changes, and I'm wrong, if we take out Thursday's low. Okay, so we have a new line in the sand. If we take out Thursday's low, then I'm not bullish on euro, and we may need to revisit a break in market structure on an hourly basis that would be bullish if we take this low out. In other words, let me say that very clearly. If we go down below Thursday's low, I am sitting on the sidelines and I'm not bullish until after this low is taken out, we get a break at market structure that's bullish on an hourly basis. Then I would be willing to start looking for this movement here to resume. I don't think it's likely to happen. I think we're just going to keep on pressing higher, and it's going to be an accelerated, quick, an impatience on the market's side to get above this high here. So I'd like to see it open up with a gap, trade down, fill it, and then run. Okay, so that's the ideal scenario. And let's drop into an hourly chart. All right, so here's where we're at. This is that fair value gap, and price was trading in here. And I said everybody would see this as potentially a bear flag. I didn't want to see that. I'd like to see it just trade right on up from there. And the market did, in fact, tear off into the upside. Cleared the rejection block here and cleared the rejection block there. So if we add a level there, you can see that's what we were hitting here, banging up into that. The hourly candles, if you take this high here and here and project it out in time, I gave you that to watch on Twitter today. Retail would be looking for that to sell off, and they just pushed it right on through and cleared the buy side liquidity, resting above this short-term high, trading up into the 114.40 level. The rejection block on this swing here comes in at the closing price on this rejection block comes in at 14.10 even, and the high on today's or Friday's daily range comes in at 14.43 and 7 pipettes. So we went above it, not by much, but enough. And then we get what? What's this? Rejection block. What's resting above here? Buy side liquidity, shallow run, retraces. Now, I don't want to see it come all the way down into here. I don't want to see that. Again, think about what I was outlining on the dollar, on its hourly chart. It was a SIBI on the hourly dollar index chart, and then it had those cluster of relative equal highs. And I said I'd rather see it not trade above that. Well, this is that same thing in the mirror image of it. We have a buy side imbalance, sell side inefficiency, a BISI. So I don't want to see it trade down here. I want to see it remain open and then press on higher into that old daily high here. Okay, so I don't want to see it trade down here. If it trades down there, does it unwind and completely ruin the whole idea? No, I don't think it does that. But it's better if it doesn't, because it would indicate that this is a breakaway gap, and then any movement higher should see acceleration in large ranges. And then we wait for another gap to form, and that would be a measuring gap. And then it would give us an idea how much of a range potentially that the euro can trade up to. Right now, it's not known. So that's the business on euro dollar on its daily and hourly. Let's drop into a 15-minute time frame. All right, so here's the 15-minute time frame for euro. Beautiful reaction in here. Optimal trade entry here to here, London, fair value gap. Boom, takes off. What is this price level right in here? What's it keying off of? Yes, it's the optimal trade entry. Yes, it's a fair value gap. Yes, it's a bullish order block, but it's also consequent encroachment. Midpoint from here to here. The algorithm starts spooling. Spooling is when the price goes one-sided and stretches out really, really far to reach for another opposing side of liquidity. Inside of this run, okay, you have to look at the parent price swing that it's inside of. It's this low and this high. So while it's going up, where is the buy side liquidity? Above this high. That's external range liquidity. This is internal range liquidity. So you're seeing a run up, optimal trade entry. So you're inside of what? You're inside of the range of this low and this high. So you're using inside to outside to frame the trade. So internal range liquidity entry, external range liquidity exit or target. The market trades up, reaches above. The algorithm is satisfied that it takes out a pool of liquidity, and time of day comes in and it just comes off, trades into the close. Even though this environment isn't the best, this is classic IPTA delivery. It's just classic. If it wasn't IPTA, I would not have been able to say what I said with these ideas and how it should just run up today. And it did that. You can go back inside of the time of day like London, New York, and see the optimal trade entries. And it sends us up into the short-term high. The overall price structure is still intact, that we can still see the 115 big figure. But it needs to maintain this price structure and should not trade down into this area in here. Okay, think about that hourly buy side and balance, sell side inefficiency. That's this in here on the 15-minute time frame. So we don't want to see it trade down there. Okay, we've already worked off of potentially looking at how this would have been a bullish trend line for anyone looking for that. This upset that. So I'd like to see it again trade higher, gap, close, and then rally up. That's what I would rather see. But we'll get what we get on Sunday and be satisfied no matter what, because we can't impose our will. Let's go over to cable. Okay, folks, this is the British pound versus the US dollar. This is our daily chart. I'm going to refrain from putting any of the lines on here because I still have all the levels on for the YouTube series. So I'm just going to go over things here. And it isn't a lot to say because I wasn't impressed with what we saw on cable. I've been reluctant to actually participate in any of its price action. We're still in consolidation. There isn't anything in here that is extremely exciting either direction. And because it can go either direction, I'm hands off. Remember, if it's 50-50, that's the same thing as 100% assurity I'm losing. Because I've learned in my career that if it's 50-50 and I just take a swing at see if I can hit a home run with it, I strike out. So 50-50 to me is like almost guaranteeing that I'm going to lose money. So I don't look at 50-50 as a potential or a consideration for profitability. Other people out there may say, well, you have a 50-50 chance. That means 100% likely I'm going to get it wrong. I'm going to always side on the fact that I'm going to be wrong in that instance. Now, if I have a 70% chance, 80% chance, 90% chance, then I'm operating in those environments. And you're learning those criteria and signatures in the mentorship. Here, we have no displacement. We are at equilibrium between the range high and low between this high and this low or in the midpoint too. Nothing that stands out in this chart that tells me it's going to go higher or lower as we are right now. So I need a displacement to occur in this marketplace. That means it's got to start moving one direction or the other with a big move. Once that happens, that creates imbalances, and then I can get a read on price. Right now, I don't have a good strong read on it. So that's the reason why we've been quiet on this pair. And look what it's done. Nothing. So again, that comes with experience, and that's one of the things you get by being in this mentorship, because you can't substitute 27 years of experience by just watching a video or listening to someone else jabber on about something they don't really know about. So let's look at the hourly chart on cable. All right, and you can see it had some volatility intraday, but nothing in here that would make me want to trade it. I still like the idea of these highs up here. I think that they're going to run them eventually. I favor the long side on cable. Like I said, if I have to sit down with you every time and give you my opinion, I still favor this run here on these highs. It's just too clean. It's too obvious. It looks like they're really selling the idea that it wants to go lower. Okay, and I'm not trying to paint the picture for you to say, okay, yeah, I'm going to go long now because ICT's giving me secret code to buy on Monday. That's not what I'm doing. Okay, I'm just saying that the obvious is this. We came out closed in a SIBI, sell side imbalance, buy side inefficiency. We had a reaction there and it traded down. Lovely. The reaction here, nice. Is it something I'm trading? No. This sell-off in here is an optimal trade entry. Yes. Is it something I'm trading? No. But I'm looking at the fact that every time we create a high, they're really painting this thing like it wants to go lower. But notice what it's not doing. It's not taking out this low. It's not meaningfully moving below this low. It's just going down a little bit and then popping back up. So I look at this overall market structure. Not only is it something that I'm hands off on, but I have to cosign again. So I'm saying that I favor this being taken out before this is taken out. Okay, so that's what I see in price. That's not a trade idea. I'm not taking the trade. I'm not going to be on here on Monday and saying, look, I took a trade here. I'm absolutely not touching this pair. I don't like what it's doing. I don't feel connected to it. And it's my favorite pair. So it does this sometimes, and then all of a sudden it roars back into the queen of volatility. So I'm giving her space. she'll warm up to me, okay, eventually, I know, and that's just the way it is. Right now, I don't want to say anything to entice you one way or the other, but if I have to say what I believe is going to happen, it's these highs are going to get taken out. How and under what context that the algorithm paints before it does so, that is unknown to me right now. Like, I literally do not have a trade idea based on what we have here. Zero. Okay, so I can't say that enough, because I know some of you have like the superhero status of me, and I don't have a real read on this pair. I'm not secretly trading it and running up 150 pips every other day. I'm not touching it legitimately. So that's why we're not talking too much about it. And that's why I'm saying as much as I am right now about for you to dial back your participation in this pair. All right, and finally the 15-minute time frame. Again, nothing doing here. We have a nice little run below there. Nice optimal trade entry, fair value gap, trades back up into buy side liquidity here. All hindsight, absolutely just me talking about the obvious. I had no visibility whatsoever with this pair. Okay, and as I mentioned yesterday, it's just nothing in there for me. So if you traded this and you got something out of it, just be mindful. Don't do the same things that I did as an early on fledgling trader where I was getting lucky and I attributed it to skill, which there was no way I had skill that quick. And it was just me being lucky. I was buying markets that were just going to go up. People get lucky all the time. All the time. And anyone trading in this environment with a cable, and if they made any profits, it's absolutely just coincidence. Okay? And I don't believe in luck. not in the sense that like I'm saying it, but I believe it was just a coincidence that I had to be buying markets that were predisposed to go up in the 90s. Okay, and that's how I got 9 months of good luck, per se. Here, nothing in this price structure absolutely makes any bit of sense to assume any monetary risk. So I've said it as best I can. I've stressed it as much as I could, and that's all I'm going to say about it. I will talk a little bit real quick and close this video up with the euro pound. That'll make it a little bit more sense as to what we're seeing in these pairs. All right, we're just going to go right into the 15-minute time frame. This is the euro pound, and this price structure should look familiar because it's very close to what we saw on euro dollar. And I said that euro dollar would just, or should just, trade right on up. This was the secret weapon behind me calling that with the fair value gap and saying that the bear flag idea that would be in the euro dollar in this time frame too. This whole business here, that was why I elected to trade with the euro dollar and say that this is the structure that I like in euro dollar. It's similar to what was going on in euro pound. If euro pound is likely to go higher, that means euro is going to outperform on the upside, and they're going to hold cable sideways. And they've held cable in consolidation and allowed euro dollar to go up, and that's going to translate into euro pound making a nice run up. Equal highs, slice right on through. We'll drop out to an hourly chart just to give you a flavor of what this also was showing. All right, so we have a bearish candle right for the displacement, bullish order block inside of a market structure that is defending. Every time it drops down, it's not taking out a low. They just keep accumulating more, and then boom, pops up. What's this high? In terms of this high here, relatively speaking, lower on the right, easy low resistance liquidity run. And that's what you get with the euro pound. Euro pound was the basis as to why I was electing to focus primarily on euro dollar. Same market structure in here that euro dollar had. And I'll show you real quick in contrast. Okay, keep your eye on the chart right in here. It's going to look very similar. See? And then rallied up. So that was the trade missing link, if you will, as to what I was calling for euro dollar in its fair value gap there. Okay, so it makes a little bit more sense now that I have the annotations on. But that's the business behind it. And if I were a trader that trades euro pound, I'm not, then obviously that's the trade to take. But I'm primarily euro dollar, cable, once in a while Aussie dollar, once in a while dollar CAD. But they're primarily, that's the markets I'm working with. And because of that, I used euro pound as a selection tool, okay, or a confirmation tool, kind of similarly like I do with dollar. Like I don't trade dollar, but I use dollar as a barometer. It gives me my context. Euro pound is a filter. It tells me which pair, whether it be euro or cable, that I'm going to trade based on what it's doing. So if euro pound has a directional bias that's heavily slanted for a up move or a down move, I use that to break down the pairs. I want to more or less trade the weaker for shorts between euro and cable, or trade the strongest for longs between euro and cable, depending upon what euro pound's going to do. Most of the time, euro pound's not in a trending environment. Sometimes it's held in consolidations for a long period of time, and it's usually when euro and cable are trading in tandem, one direction or the other. So that's going to be it for this one. I will talk to you by way of daily update on Monday. Enjoy your weekend. Be safe, charter members. You will have your model number 6 trading plan, or at the very least by noon tomorrow, depending upon how much I can get done, because I have a ton of stuff to put together for it. So it is what it is. We'll get through it. Promise we'll have it by noon tomorrow, Saturday, July 18th, 2020. And again, that's a charter video. So people that are not charter members, that means if you're still making monthly payments, you're not a charter member. Okay, so you won't be eligible to watch that video. But once you are a charter member, all those videos will be accessible to you all at one time. There's no throttling. It's all, once you're a charter member, you have access to everything that's charter member. Too many of you to manage all that stuff. I used to do it like once a month you'd get something new. It's just way too many of you to do that now. So once you're a charter, you got everything. A lot easier for us on the admin side, and it's like Candyland for you all when you get there. So I'll talk to you on Monday. Until then, again, be safe. Enjoy your weekend.